as Finn said, this is definitely a passion of mine. I've actually worked for some female founders. Rachel, I saw you in the audience, worked very closely with her, and I've worked with others, just helping them either start their company, get them funding, or even investing in founders. So this is a net new workshop I created about 2 months ago called Pitching Better, a workshop for female founders to overcome bias in fundraising. And so just a quick introduction, which I know I've just been introduced. I'm on the AWS Startup BD team. I'm also a venture partner at Fairhaven Capital. It's a pre-seed VC fund in San Francisco with about 125 million in management. And I'm also a former founder. I raised 2 rounds of funding for my last startup 7 years ago, and also worked in VC, managing Mark Cuban's East Coast portfolio. So, you know, helping female founders is just a passion project of mine. You know, working with females, and also, you know, investing in women is something that I'm very focused on. And this workshop really came to fruition when I realized now with A4, lots of female founders pitch me on a daily basis. And I realized that there are some distinguishing differences in pitches. And so it made me really think about my time raising money and my time starting a company. And then I read this really great research we'll talk about in a little bit about what those differences are. Some are great and some are, you know, a bias that we can overcome together. And so I wanted to just quickly pause and ask a question. How many of you have felt a disadvantage while fundraising at all? And all you have to do, I'm going to ask a lot of questions, is go in the chat and just say yes, no, or the answer. And then Madeline will read it off to me like the majority says this. So how many of you felt a disadvantage while fundraising? Just put in the chat yes or no. And then in like 3 or 10 seconds, Madeline will tell me kind of where you all are at. It could be anything. It could be.
We definitely have an overwhelming amount of yes, and definitely is coming through.
Great. Oh, that's awesome. You know, it's interesting. I like to ask this question because I think when I was fundraising, I was in VC prior. I knew who I wanted to raise money from. I've seen hundreds of decks. I really felt confident, didn't think I would be disadvantaged. But then going through that process, I realized, holy shit, you know, I definitely was disadvantaged. I definitely dealt with some unconscious bias. And that came really through, manifested through this question. A notable blue chip VC asked me this legitimately ridiculous question when I was raising money, and I believe this was my seed round. And he asked, are those sales like real revenue from partnerships or something else? And I was like, well, hold up. First of all, what is fake revenue? Like, this is not a real question. And it made me think at this point, like, I highly doubt that male founders would ever get a question like this. And so it really made me realize, like, there are some significant differences. There are some biases that we face, and we should be equipped and learn how to overcome them and use them as basically a weapon. And I wanted to just quickly go over the goals of this workshop. You know, from as a female founder to female founders, I really want you after this workshop to demystify the act of pitching. If this is your first startup and this is your first time fundraising, you should now kind of know what questions you'll get. And you know, I've sat in a lot of workshops and a lot of fundraising events, and I think they do a really great, some do a really great job at helping you plan. How do you fundraise? Like what kind of investors you should look for, how you should create your pitch deck. But I haven't really witnessed a workshop that's really narrowly focused on you in the pitch. How do you answer those questions? And so this workshop is narrowly focused on helping you, once you get that meeting, answering the VC questions in the most impactful and effective way. And, you know, as a VC, I've realized the questions I ask sometimes are biased, and I've had to pivot and make sure I'm asking the right questions. But I hope after this workshop, you walk away and you're like, I know what I need to do to prepare. So once I get that meeting, to crush it, right? And be able to raise significant amount of money. And so this workshop, I think, is to empower female founders to raise more capital than previous years. I think we've all read that same research. where about 3% of all VC capital investment in 2019 went to female founders. I really hope we can move the needle, and this is just kind of one way I'm trying to tackle it. And just zooming out before we jump in, this isn't a lesson on how to think like a man, right? Or change who you are. You can be authentically you and true to yourself and still raise significant amount of money. And I think that's really important. So let's jump in. I want to introduce you to Professor Laura Huang, who is probably a role model to me, and some of you might already know her research. Over the past 5 years, she's focused her research on early stage entrepreneurship, specifically on the gender disparity between male founders and female founders. And her research has been published all over, from Harvard Business Review to Scientific America to Forbes to Fortune. And really, you've probably read a few of her articles, but I want to focus on one research study she did specifically around 189 early stage startup founders who were 12% female and 88% male, and then 140 VCs, which were a good mix of male and female. And she basically followed, observed, and recorded all fundraising activities between the two parties. And she came to some really interesting conclusions, that male-led startups raised 5 times more than the female-led ones over 2 years. And she found this, and I still find this pretty staggering, right? That male-led startups raise 5 times more than the female-led ones, especially when she says that the founders and the startups were equivalent in experience, in product stage, and level of technicality. And so the teams were pretty on an even keel, and she was pretty shocked about the results of this study. And so what she realized is that we assume that investors think of and evaluate founders based on product and market opportunity and the technology and business viability, everything that you put in your pitch deck and you prep for, right? But what her research actually proves is that investors draw heavily from the perceptions of the founding team through unconscious bias. And the majority of questions asked by investors really depended on the gender. And so if you see there here, male founders were asked 66% more questions were promotional in nature. So again, just to repeat that, because I knew this is a new term, investors asked more questions that were promotion oriented to male founders than to female founders. And then investors asked 67% of questions to female founders were prevention oriented. So male founders got promotion questions and female founders got prevention questions. And she thought maybe that has something to do with this disparity, right? And so promotion questions, you might ask, like, what are these terms, right? These are net new terms. We can spend some time here. Promotion questions are questions around your hopes and achievements and advancement and ideals. They usually ask how great everything will be, right? A great example of that would be, how big can this business get, right? That's a great promotional question. It lets the founder answer how great your company can be. But if you compare that to a prevention question, prevention questions are usually around and centered around safety and responsibility and risk and security. Usually the questions are around how horrible everything will be. Again, like how horrible everything will be. An example of that would be, how can you differentiate in this crowded market, right? It puts the founder on the defense, right? And it's making the founder answer questions in regard to risk, right? This is a competitive risk. And so what she found is these questions are very significant because it begets a promotional answer. So if a promotional question gets asked, the founder will answer it in a promotional way. But if a prevention question gets asked, they're answering it in a preventative way, most likely. So male entrepreneurs, when they're answering promotional questions, reinforce their association with promotional qualities like gains and ambitions, right? And then prevention questions really put the female founder on defense, and you have to answer and explain away And instead of describing your company on like that home run potential, something that VCs are looking for, right? So this is already a challenge that female founders have to face. But there is a silver lining. So I don't want this to be like a depressing workshop. This is really to empower you, because the silver lining is, regardless of gender, if founders are able to answer preventative questions with a promotional answer, again, a preventative question with a promotional answer, her research proves that founders can raise significantly more money. I think it's, $7.35 million more. So if founders were able to take a prevention question and answer it in a promotional way, they raised $7.35 million more than founders who answered it in a prevention answer. And so that is a great opportunity to all founders to learn how to answer the prevention question in a promotional way and be able to raise significantly more money than previous. So for the rest of this workshop, I want to get really tactical. I want the founders, let's work together and identify unconsciously biased questions, right? I mentioned like this is an unconscious bias. Let's learn how to identify what a prevention question is versus a promotional question. And then from there, we're introducing a methodology called RIP, Reclaim, Inform, and Promote. And that is the way that every founder should answer preventative questions, right? And so if you can do that, you can successfully raise money. And then we'll wrap things up with some just high-level tips on fundraising at an early stage, and then open it up for questions. So I'm gonna pause here and ask if there's any questions. If you can add it in the chat, Madeline can read it off to me and I can answer it before we jump in to more of the tactical activities.
So far, I think the only question has been about getting a copy of the slides and recording of the event afterwards, which we all shared that we can do that. Another question we've got coming in is, why does your company have high growth potential?
Why does your company have high growth potential? So I would say, I'm assuming that question is around, why do you need to prove that you're high growth potential? And if that's the case, it's mostly because if you are planning to create a business and raise VC funding, they're investing with the idea that they're going to get an X multiple of revenue from an exit, right? And so it has to be a high growth company. And so the more you can build a high growth company and the more it looks like a high growth company, the better chances are that it fits within the VC's hypotheses or thesis in investing. I hope that was the right question, but I'm happy to answer another one in the same vein.
Oh, she was just using that as an example of one of the questions that she receives, but still an excellent answer.
Okay. So it's why are you a high growth company is a question she gets from an investor.
Yes.
Oh yeah, very, very preventative, right? Like we can put that through the framework too at the end. Why are you a high growth company? And then we could talk about how to answer that question. But yeah, super preventative, gives me chills. Sorry you have to go through that. Okay, so let's jump in since there's no more questions. How do we overcome this bias, right? And so the way I propose is going it through the RIP methodology, right? Reclaim. So you first have to reclaim and identify a prevention question and distill what they're asking, right? So we need to learn together what's a preventative question, right? Why are you a high growth company? And I'll tell you exactly what criteria and what questions you need to ask in your head to know that why are you a high growth company is an extremely preventative question. And so we'll go over that. And then you need to also figure out is what are they really asking, right? Because we don't want to answer just preventative questions with preventative answers. We want to know, okay, if you're asking why am I a high growth company, maybe you're really asking what the technology is behind it. And so be able to identify both what the question is and what they're really asking so you can prepare your answer accordingly. And I just say like, okay, a framework for answering questions, that seems a little crazy. If you do this over practice, and you get your co-founder or your friends to ask you investor type questions, the more practice you do with this, the easier it will be, and it'll become so natural to you, I promise. It won't be multiple steps. You're not going to be like 1, 2, 3, right? It's just going to come out naturally, and you'll be able to answer questions in a way that just feels natural, even though it's not right now. And so after reclaim, we have to inform. We have to answer the question directly. And then from there, we need to promote. And that is the most significant part of this method, is being able to promote your company and promote in a promotional way. So let's jump in. So step 1, reclaim. We need to identify a biased question and distill what they're asking. Okay, so here are the tips that I just mentioned on how to identify a biased question, right? As a founder, do you feel like you're on the defense, right? If I got asked, why are you a high growth company? I'm like, holy crap, like I'm gonna have to explain my business, explain why I think this is a $1 billion business, instead of saying how I'm gonna grow this to be a $1 billion business. So I already felt when you asked me that question that I was on the defense. So that is probably trigger number 1. 2, another question that might indicate if it's preventative: are you explaining the essence of your company instead of your goals and vision, right? Do you feel like you have to defend your company and why you're working on it, instead of saying, this is the culture I want to implement, this is my really exciting strategy that we're going to get to be a $1 billion business? So if you're explaining the essence, if you feel like you're on the defense, those are all indicators that it's a preventative question. And then lastly, are investors asking about retention, costs, risk, or loss? Those are all big clues that questions are preventative, right? It's all in the realm of security and loss. And that's important because investors are investing in home run potential, big winners. And if you're not able to come across as a big winner, you're highly unlikely to get a check, right? It's not enough to say, I'm not going to lose your money if you invest in me to get investment. You have to make it seem like it's a home run potential. So those are the things you need to think about when investors ask you questions. So let's run through a few examples, because I'm a very pragmatic learner and I have to learn by doing. So let's do this together. Okay, customer acquisition. To the left, a customer acquisition question would be, and a promotion-oriented question would be, what is your plan to acquire customers, right? Very promotional in nature. Basically, the founders get to explain how big your business is going to be, right? Like, how are you going to grow this to be a $1 billion business? So that is a very typical promotion question. But an equivalent prevention question to that would be, how will you manage customer acquisition costs? Again, like big clues to me, costs are always a preventative type question. How will you manage it, right? Assuming you already have those costs. So you kind of have to explain already. So 2 of those clues make it very much a prevention question. So if you just zoom out, right? If an investor's asking about customer acquisition, what is your plan to acquire customers, right? What's your growth plan? Versus how will you manage customer acquisition costs? You're on the defense. You're going to have to explain how costs are going to be decreased so you can grow a business in an effective way, right? So let's go through another example. Questions about revenue. A promotion question around revenue would be, what's your monetization strategy, right? How do you plan to monetize? How do you plan to monetize and grow revenue? Very much a promotion question. But the prevention equivalent would be, how will you convert free users to paid, right? How will you convert free users to paid? And that's a preventative question, right? Because it's around risk, right? And that might not be obvious to you, right? But it's around risk. It's saying that's a big risk in a lot of freemium models, is making them convert. And so you're going to have to explain the risk, the analysis, like the stickiness of your product. And so that is a prevention question around revenue. Again, promotion, what's your monetization strategy versus how will you convert free users to paid? Let's do another one around market opportunity. A promotion question market opportunity would be, how do you plan to capture the market? Oh, that is a dream question as a founder, right? I'm going to explain like 16 ways my awesome strategy and my great company will capture the market? That's a wonderful question to get as a founder. But a prevention question that would be equivalent to that would be, how will you compete with market leaders? And that's a question that you'll get a lot, right? How will you compete with market leaders? So again, very much a prevention question. It's talking about risk, it's talking about competition, it's comparing you to someone else. All those things, you're having to defend your business versus maybe the Microsofts of the world, right? And so those are the clues that make it that question a prevention question. Okay, so your turn. I'm going to put a question up here and then go in the chat and tell me if it's prevention or promotion. And then Madeline's going to tell me the majority, and then we can go through the right answer. All right, so why will people buy products from you versus Target? What do we think? We think this is promotion or prevention?
So far, prevention, prevention, prevention. All prevention.
You got it. That is like case 101, prevention, right? It's comparing your company to something else. You're going to have to defend your company, and you're going to have to explain the differences instead of saying how you're going to capture the market. So great. I'm glad you guys are listening. Next one. Oh, right. So the promotional question that would ask the same thing, explain your competitive advantage, right? That is exactly the thing they're asking, like what makes you unique, but in a promotional way is explain your competitive advantage. All right, next question. What's your plan to grow 1 million users? What do you guys think, prevention or promotion?
Promotion. That's what everyone's saying.
Yep, you guys got it. All right, let's keep going. How is this defensible? Promotion or prevention?
Prevention.
Prevention. Yep, totally. And then feel free to add in the chat. So what do you think what they're really asking? What is the promotional question within this one? How is this defensible? Can anyone have any guesses of what the promotional equivalent would be? If not, I'll give it to you. What's your protective moat, right? Or what's your competitive advantage, right? These are all things that are very promotional in nature. What's your protective moat? Well, let me tell you, right? I have amazing patents. I have the most incredible engineers that got their PhDs from MIT and machine learning, right? All very credible things, and you get to talk about your business that way. And so it sounds like we got it. We're going to keep going through a few more examples, but let's go through steps 2 and 3 now. And steps 2 and 3 are inform and promote. And this is how we need to answer the question. So now we know how to identify it. We know what they're really asking, but let's figure out how to actually answer these questions appropriately. So the first part of your answer, and this is really tactical and granular, so bear with me. The first part of your answer needs to inform. It needs to be just 1 or 2 sentences that actually answers the preventative question head on, right? It's concise, be direct, clarify if the question isn't clear, and use data and market benchmarks. Answer that question head on, right? And then the second part of your answer needs to promote. And you should spend the majority of your answers answering in a promotional way, right? And to be promotional is to be ambitious, it's to be aggressive, it's to sell your vision. Yeah, of course, methodical and intentional, right? And so an example of, the question that was posted in the chat before is, why is this a high growth business? Answer that question head on. Well, we're already growing at 20% year over year. And we plan to grow, increase that growth rate by 15% or something like that, right? That's it, answering the question. And promote. And then you just go through like how to promote it. Like I can like use a few examples, but say by year 2025, this business is going to be our annual recurring revenue is projected to be $500 million a year, right? And so you promote it in a way that says you're ambitious. This is going to be a big business, and you have the strategy to get there. So let's run.
quick question coming in. So we still respond initially. Wouldn't we be entering on a defensive manner?
Yeah, I would say, of course, avoid all defensive language. But yes, you have to answer the question. If you don't answer the question head on, you end up being what I call the sleazy politician spin, right? You're not actually answering the question. It's like if I was a politician and someone said, "Why aren't you building a healthcare center in our community? We need one." And I say, okay, well, CVS is, and I'm not answering the question. I say, oh, my campaign says that taxes should increase to pay for healthcare or something like that. That's not answering the question. And so as founders, we should answer that question, even if it's in a defensive way, with 1 or 2 sentences max, just enough to answer the question, but you want to spend the majority of your time promoting it. Because you want to avoid that sleazy politician spin, and then it looks like you're not even listening to the investor and you're not answering those questions.
Another question is, do we attempt to translate into promotional questions and then answer that?
Yes, you totally can. So and that's what I meant by clarify if not clear. A lot of the times the technique would be, if I hear, why is this a high growth business? And you could say, well, excuse me, do you mean what's the technology behind it, right? And so you can already nudge that investor and clarify it and make it a promotional question and answer it in a promotional way. So yep, that's exactly what you should be doing as well. Cool. All right, let's keep going. So let's run through a few examples. I think it will really hit home after we go through a few of these scenarios. Okay, so we made up this fictitious company called Any Company for this workshop. So Any Company is a platform for teachers to build class curriculums using artificial intelligence. Again, it's a e-learning platform for teachers to build class curriculums using AI ML. So that's the company we're going to work with through these scenarios. Okay, so we get the question, how will you manage customer acquisition costs? So we already know, right, that this is a prevention question. And so I gave an answer that I think founders outside of this framework might answer it. So let's take the next 15 seconds to read my proposed answer, not using the RIP method. Okay, so I'm counting now. Cool. Again, it's just a question I thought that would be a great answer if I didn't really know how to answer a VC question. So quick question, everyone out in the chat, did you guys think this was a good answer? Just say yes or no.
Yeah, kinda, yes, not really. Defensive answer, it's okay, no.
Yeah,
Yes.
I mean, it's a good answer for anything besides VC, right? Like I would answer, and I'm just gonna go back to it. I would answer this question. I use data. I show that I know my stuff, my metrics. I talk about my strategy. Those are all great things for everything outside of VC. And that's why it's so important to go through this framework, because it's not natural. It doesn't feel like when we're actually going to talk about how to answer this question, it doesn't seem right. But that answer is a great question, a great answer, I mean, for your colleagues or at work or even in school, right? Because it's a great answer, but not for VC. So let's see if we can go through the RIP framework and see how we end up, right? So we know it's a prevention question, right? We already talked about it before. The promotional question within it is how to grow your business affordably. And so the founder who posted in the chat, it's a great question. I'm glad you asked it, right? You could clarify instantly and say, oh, do you mean how we plan to grow? What's our go-to-market plan or a growth strategy, keeping in mind cost or affordably, right? But if you don't do that and you just want to answer the question, let's see if it's a good informed example. So here's our example answer. And then I was like, I don't see any of this being promotional. I think all of it is just informal, like it's informational. It's just informing the person asking the question what your customer acquisition costs are, right? Maybe you could say, we will introduce a top-down acquisition strategy as forward-looking, but I don't think that's promotional. So I think that like the whole promotional part of this answer is completely missing. And so I took a stab at what would a promotional answer be. And so here it is. I added it. It's totally not the best, but it gives you a good understanding of what I mean about inform, then promote. And so overall, there are 250,000 school districts in our addressable market. And we believe we can penetrate at least 5% of the market by 2021 with a 10 million recurring revenue, a monthly recurring revenue through co-selling and direct marketing, right? To me, that means the founder did an excellent job at promoting. They're saying, yeah, we think CAC will be around $200 per school, but that's okay because there are X amount of school districts and we can grow this business to home run potential pretty quickly, right? And so it's really important to not just answer the question or clarify it and ask the promotional question, but answer it in a promotional way, right? And so that answer is really, how are you going to grow this business affordably? And that's how the promotional aspect comes and kicks in. So let's do another one together. All right, so how do you plan to defend against new competitors? How do you plan? So again, here's my answer that I thought of for my company. I mean, any company. Let's take the next 10 seconds to read the answer. Cool. Okay, so this is just something I thought of, like how I would answer this if someone asked me this question. And so was this a good answer? Let me know, like throw it in the chat, yes or no.
No, okay. Just an okay answer.
Okay.
There's room for improvement, could be better. It has a lot of dependencies. It was a bit cocky.
Yeah, cocky. It's a good one. It's a good one. Yep. Yeah. It's not the. It's probably a fine answer. Like if you're talking to a colleague or someone you're trying to hire, right? Like we only think there are 2 true competitors. I hear that a lot. I hear that a lot as a VC. Someone's like, well, there are no true competitors, which is probably like nails on a chalkboard for most VCs, right? Because you should always look at where your customer's money is going for the equivalent. But I think that's okay if you say there's only 2 true competitors, especially if you're first to market or second to market. But let's go through the framework and see like how to make it better using the RIP methodology. So we know it's a prevention question. They're asking about competitive advantage, right? Like the question is, how do you plan to defend against new competitors, right? So new competitors, it's competitive advantage. They're trying to see how are you differentiated, right? So let's see this answer again. Inform. I think it's all informing, right? Like right now we only identify 2 true competitors. Our plan is to lock in customers. Like maybe our plan to lock in customers is forward looking, and it's kind of promotional. But it doesn't really tell me, it doesn't connect the dots as why is this a home run potential. It's, you know, we're forward thinking and we have a great strategy in place, but it doesn't say with this strategy, we're going to crush it, right? And so if we want to think about a promotional aspect of this answer, it'd be something like answering the inform plus adding this part to clarify. Our unique competitive advantage will be our first mover lead, our engineering team and pricing, where we will outprice competitors so we can scale as quickly as possible. If we can execute on those 3 things, we believe we can capture at least 10% of the market by 2022, right? So you see in that answer, it's just very promotional. We've identified these ways, right, to be different than the competitors and position ourselves against the competitors, but we're going to grow a great business. This is going to be a big business. And just reinforcing that with a promotional answer like that is the way to answer the question, although it doesn't seem that natural. All right. All right, so let's do a few together. And so you can just add in the chat, and we'll try to do this together. And so the question will be, how do you plan to decrease churn? How do you plan to decrease churn? Prevention or promotional? Feel free to add in the chat.
Prevention. That's what everyone's saying.
You know it. It's prevention. It's about risk, right? Like, this is a risk-oriented question. It's a prevention-oriented question. And so what are they really asking? Can someone propose in the chat a promotional equivalent of that question? I'll go back to it.
What is your customer retention strategy? How are you planning to retain your customers?
Yep, perfect. Perfect, right. It's all about retention. It's all about customer satisfaction. How are you going to keep your customers happy, right? And so I threw some answers in there, but in form, I said we are actively measuring churn through a cohort analysis where we find churn is 25% lower than market. And then I thought, we are instating new NPS goals on our customer success team to incentivize teams to focus on customer experience. Like, that is an informed part of the question. You're answering it dead on how you're going to decrease churn and how are you going to increase customer satisfaction. And then a promotional answer that would be, with the new NPS goals and customer happiness as a company value, our leadership team will prioritize growth in the next 6 to 12 months where we can acquire 10 million users, blah, 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 right? And so that's really the focus. Like, if you thought about it in your head, we can do the next one where maybe someone can type in the chat an informed part and a promotional part. It seems like not natural, right? When I was going through this, I realized that, like, I just wanted to answer the question really well, right? I wanted to show the investor that I knew my metrics. I've already thought of this and I have a plan in place to fix it or solve for it. But that's just not enough. We also need to promote whatever aspect of that business is. And so let's keep going. So here's another question. Are those sales? Okay, yeah, so full circle. Now, this is the question that Blue Chip VC asked me in 2014. So let's run through the RIP methodology and see how I should have probably answered this question instead of maybe just like rolling my eyes and just not caring, because I was like, I'm never going to take money from this VC. So are those sales ... like real revenue from partnerships or something else, right? We all know this is a prevention-oriented question. How would someone want to answer it in a promotional way? We could just skip the informed part, but like, looking at my answer and thinking about it, how would you want to answer it in a more promotional way to show that you're growing a big business? Feel free to add in the chat. We can wait like 30 seconds. If not, I can just walk through my proposed answer. Let me go back to the...
Yeah, no one's shared anything yet.
Yeah, I mean, I can just jump into mine, right? It's, of course, it's revenue, right? And you can clarify, do you mean how I got this revenue? What is this revenue? Is it on my balance sheet? We have partnerships with contracts with 3 different hotel chains. And then I would take that answer and promote it, right? We plan to grow these partnerships in the next year by 150%. And sell directly to 2 million prospective customers. So really answering the question, either clarifying it or answering it head on, and then spending most of the time answering it in a promotional way.
So Laurel said, we're already growing at 20% month over month. Letha shared, partnerships drive the majority of our current revenue, and that's growing year over year by XYZ amount. And then Sophia shared, hell yeah. The numbers seem high, but they're real, and we're proud we've gotten those sales and anticipate continuing to do more given our expertise, connections, and customer satisfaction.
Those are all great answers. The last answer in particular, like, hell yeah, first of all, I love that. You're answering it head on. Of course they're real, right? And then promoting your business and saying how partnerships are going to build a great business. So all great answers, great job. I think my work here is done with the RIP methodology. So a quick summary, and then we can open up for questions. Anticipate prevention questions, right? Based on Professor Laura Huang's research, we know it happens, and we know as female founders, we're going to get the brunt of it. So learn what they look like. We're going to send this deck out. It's also recorded. There's also some great literature online about what kind of preventative questions are very common. A lot of them are already in this deck, but then you could just go and practice them, right? Anticipate that they'll be asked. And then don't let prevention questions frustrate you, right? Don't let it get you upset or feel like they're judging you already, right? This is an unconscious bias. The craziest thing about Professor Huang's research is that female VCs were just as biased. And so I'm not quite sure why, right? But female VCs were asking the same amount of preventative questions. So don't let it frustrate you. Use it as an opportunity to really crush that answer. And of course, if you don't want to answer that question, just clarify. Are you talking about blah, blah, blah? Oh, are you asking, or do you want to learn about X? Or are you asking about Y? And then answer that question, right? And then don't just answer the question, right? This is the bread and butter of this entire workshop is you need to both inform and promote. Answer and promote. It's just super important. Every answer should have that. And you might feel weird. You might be like, this is obnoxious. Trust me, male founders that pitch me do it all the time. So don't not do it just because it feels awkward. This is like research proven, and it's great for your business. And again, avoid the sleazy politician answer. You want to answer that question. You can either clarify or answer the question with data and then spin it to a promotional answer. Very important. Double down on the big risks in your business. Something I did when I was fundraising is I was, raising money for a hardware company in the time that software was eating the world, right? It was very challenging to raise money for a very expensive machine I was building. And so I wrote down all the areas and risks in my business, and I thought of the questions they might ask, and I prepared answers for that. Of course, I didn't memorize them, and I didn't say word for word those answers, but anticipating what they're going to ask based on your knowledge of your business, and where those risks are, you'll be quicker and faster in answering those questions and way more prepared. And then, of course, practice makes perfect. As I said, write down those questions and practice promotional answers, inform and promote answers with your colleagues, your co-founders, or your friends. It just makes a world of difference. And then just a few more tips on fundraising overall, and then we can jump into some questions. I'm glad someone said sounds cocky or sounds like you're bragging. That's okay. I think there is a room for a little brag, right? If you're a PhD in machine learning and you sold your previous company for $10 million, I want to know about that. And I think you should lead your presentation with that, right? You should know your strengths and make sure it's apparent in your pitch. And it's okay if it's a little braggy, but of course you don't want to index on being extremely cocky and not likable. But I do want founders to make sure that they're saying the right things, they're saying their strengths, and they're reinforcing it with investors, because maybe they didn't see that in the deck, and it's really important to say that. And so follow up on certain items via email. A lot of the times in pitching, and one founder did it really well a few months ago, I was asking questions about, tell me a little bit more about the customer experience, but walk me through all the way from onboarding to paying. I need to know the flow a little better. And she could see that I was really struggling. It just wasn't clear to me. The coolest thing she did was she followed up and she really spelled it out for me via email, even with a little picture. And that does world of difference. And if you see investors asking questions on either your business model or your monetization strategy, or asking a few more questions, spending a little bit more time, it's probably because it's not either clear to them or they can't prove or disprove in their head. And so what you should do is in your follow-up email, give some data, evidence, feedback on that area of the business. It seems as if you are struggling with X. I just want to give some more data points to see if it's helpful. Just make sure that you close that loop with the investor so they're like, oh, that makes a ton of sense. And they don't just sit there and be confused and maybe just pass because they don't understand. So use that follow-up email not just as a thank you, but as a clarification email and give more data and feedback. And so even if investors pass, this is another great tip. A founder has done this wonderfully in the past few months. Add them to a quarterly or monthly email blast. Let me know how your business is doing. You know, it might be too early. It might be just the business model isn't right for their investment theses, right? But you're going to pivot, right? Most companies pivot. You're going to change a few things. You're going to hire a key player. All these things are really important, and sharing that on some type of cadence is just a great way to share really impressive things or your overall strategy and build a relationship and earn trust with investors. So not enough founders do this. I think it's a great way to do it and really enhance that relationship with an investor. And then I think this is kind of more of a preference, and I think it's a little bit, it's really strategic as a founder, is don't send a deck beforehand. Send an email blurb about the company, because a lot of the times investors just make their mind up off a deck and they don't give you that time to really explain your business, especially if it's nuanced or it's complex. So I think it's better for founders. You probably have a higher hit rate of scheduling a meeting with an investor if you just send a blurb and then send the deck either right before the meeting or thereafter. It's just a great technique to get that meeting secured. And then you're able to really speak to your business, which can enhance the quality and just the understanding of it. And importantly, and lastly, feed the FOMO. You've probably heard this a million times, but VCs feed on the fear of missing out. They want to know about every good deal. They want to invest in every good deal. And there's some really great techniques out there to feed your FOMO, either saying, you know, we have a bunch of investor meetings this week. Can we schedule for early next week? Just things like that to say, you know, we have a lot of interest, or we're closing rather quickly. We have some room left in the round. Just areas that can make them like either focus and realize it's time sensitive. And so that's it with this presentation. Happy to open up to Q&A. Looks like we have 8 minutes left. Is this an hour? 8 minutes left, but I can stay after to answer some questions.
Sure. I think some of the questions we had is a question they receive is touching on market size and how to justify that.
Yeah, I think the market size, if it's just what is the market size or how did you calculate market size, I think that's probably a neutral question, right? It's just like, tell me about it. The best way to do it is just walk them through either the bottoms up or the top down analysis that you did. And so I'd like to know that too, especially if it's a crazy high in the high billion numbers. I just want to know how you got there, right? So it's, you know, for any company or fictitious company, there are, you know, 700,000 school districts in the U.S. alone. From there, there's an average of 20 teachers per school district. And if we're charging per head, that's about, you know, I'm not doing the math in my head, that's about $7 billion a year, right? And so just walk them through that analysis on a high level is really helpful for an investor, so we can just connect the dots.
Awesome. And then, do you think VCs are being educated that they have unconscious bias and ask promotional versus prevention questions, and more to female founders?
I think so. I mean, I can't speak for everyone. I know a lot of funds are investing money and time to learn about unconscious bias. I'm hoping to adapt this talk to also be to VCs to help them overcome this, because I know now I self-correct and I make sure I'm asking the right questions for underrepresented founders so they have just the same chance as raising money. So I like to think they are, and I know personally I will try to do my part. and also, you know, share this workshop with funders. But I think overall, yes, they are investing time. So hopefully we can meet them in the middle. Both we overcome this as founders, and VCs learn how to deal with it, and then we don't have to deal with this much longer.
Great. And then Rachel receives the preventative question of, why don't you have a technical co-founder? We have a tech team, but they are not co-founders.
Yeah, why? So I'd say, why don't you have a technical co-founder? Is a preventative question, right? I mean, like, if we run through those questions, you're on the defense. You have to explain why you made this decision. Doesn't help you explain your business, right? All things that make it a preventative question. I think it's a question that, especially for a lot of investors who are focused or have their investment theses on having technical founders, will ask something like that. And so I would say it's probably a somewhat common question to non-technical teams. But I think an example of a real big winner would be, you know, the recent acquisition of Mir to Lululemon. The founder was not technical. She studied Russian literature and was a ballerina, and still was able to grow a hardware business to an exit. Are you asking that I need a technical co-founder to build this business? And if they say yes, you know, it's a highly technical business, then you give your strategy of how not having a technical founder is either intentional or equips you to move faster or something like that. Or that your two founders, your both strengths and skill set is all that's needed right now to build a business. And so I would say, you know, one, if you don't have a technical founder, you have two business-minded founders, don't talk to investors that only focus on technical co-founders. Like, I'm pretty sure Y Combinator is an accelerator that really likes founders having technical backgrounds. I think it's really hard for them to jump. I mean, I know that there's always edge cases, but they have said that they like technical co-founders. So if you don't have one, I would just make sure that you're not talking to investors that like or prefer it, or it's within their investment theses. But yeah, that's a prevention question. I would just go through that framework and answer it in a way that's promotional, right? That makes you either uniquely equipped to grow business, or that, like, your focus, this is a sales business, right? Like, we have a first mover advantage, and we need to get as many people on our platform as quickly as possible. And that's why we think sales and marketing is ultimately the competitive and strategic advantage of this business, right? Something like that.
Should you do the meeting with your co-founder or alone?
You know, I think in the day and age of Zoom, it's easier to do it with your co-founder. If one is really confident and is articulate and likes the process, maybe they should focus on fundraising, another co-founder do something else. I always like, in the very early stages, having both founders. But what I've seen lately is normally just the CEO is doing the fundraising, and the other team is mentioned throughout the deck. And maybe the investor wants to meet the entire team after the first call. But so, you know, I think it depends on the company and the investor. I don't think it's a requirement, but I also sometimes think that it's nice for an investor to meet other people on the team. So not the best answer, kind of hand wavy. It's really just up to you and your team.
Ala asks, if someone started the same idea with the same business model tomorrow, what is your barrier?
Oh, can you repeat that question?
If someone started the same idea with the same business model tomorrow, what is your barrier?
And that was a question an investor asked?
Ala, can you confirm that was a question that you received from an investor? Yes, that is a question that she has received from an investor.
Okay. Oh, wow. That is a colorful question. I've never heard of that one. So I think, you know, that is a, wow.
Yeah,
that's
a lot of people are sharing that they've received that question before.
Oh, wow. Okay. So let's go through it together then. If it's a common question, like, do you guys think it's a preventative question or a promotional question?
Preventative.
Yeah, I feel like it's preventative, right? It's basically saying, what is your competitive advantage versus new incumbents, right? Like, how are you going to do better than other people that are starting companies? And so I would focus on what is your competitive advantage? What is your strategic advantage that you have right now? And that if you throw gasoline on it, it will scale like crazy. And so it's again, it's also answering that the promotional question within that question, and I think we talked about it already, is what is your protective moat, right? Like, how is your business unique, and building a moat around it, that you can fend off competitors. And so that's how I would answer the question. I would say, that's first of all, I would say that is a very interesting question. But if you're asking me about what my competitive advantage is right now, for new incumbents, and then I would just go into my answer, right? And so that's how I would answer it. I would talk about what I think is unique to my company, the strategic advantage that we're doing, the strategy around it, and how whoever's going to be starting companies, they're already light years behind, right? And that's how the promotional answer would be. Like, we've already aggregated X amount of customers, right? We've already locked up Y% of the market. And then we have all these safeguards in place in order to create a really big business.
Awesome. Yeah, Annika shared, we are the first mover and are now established with brand awareness. We have the industry expertise, etc. Which I think
Yeah,
is great.
that's a great answer, right?
Terrific. Well, we don't have any more questions coming in. Rachel shared that this was a really great workshop, very interesting to filter how we are being labeled and change the dynamic of the meetings. Jackie, thank you so much for this amazing content. Is super informative and, I think very applicable to what all these founders are going through. We really appreciate your time. SJ, thank you for helping put this together. And to all of our founders, thank you so much for joining us. Investor meeting calendar invitations will be going out over the next few days, so just keep an eye out for those on your calendars. And then to reiterate, we will be sending out the recording as well as the deck after the event. So thank you all so much.
Thank you, everyone.
Thanks, Jackie. Thank you, everyone.
Thank you, Jackie.